Are live again. Welcome to another episode of Money Matters. I am your host, Nev Kavuljevic, and I am beyond excited to go over what's going on in the world. We're going to be covering anything from what's happening with the US dollar. We're going to be going into cryptocurrencies and why you should potentially consider learning more about cryptos and maybe even investing in it or in them if you haven't. We're going to be talking about the real estate and what's going on in the world of mortgage because that's really important. We have basically a whole lot to cover, including going over how well did we do with predicting the market yesterday. So I hope you're excited about this because I am beyond excited. Let's do this. All right, y'all. So, good morning, good morning, good morning. It is a beautiful morning. What a wonderful morning. What a wonderful day, as they say. And here we are at 7 o'clock, coming to you live only on onedealaway.com/live. Every morning, 7 a.m., we go over, cover things, talk about good news, bad news, all kinds of information, as well as potentially occasionally put in some predictions of what might happen in the market based off of what we are able to see and learn. And boy, do I have all kinds of cool things for you. And, we've talked about so many different things, but let's jump into market. Why not, right? I mean, we've done something very interesting last week, as in like last day. That's typically called yesterday, Nev. Let me switch around and take a look. My gosh, you can't see anything over here. Hold on. This is one of those things I tell you. Sometimes you have one website where the print is so tiny you can't even see it. You got to zoom in, but then you switch to another page and it becomes so huge you got to zoom out because you can't see anything. All right, 50 might be a little bit too small. Okay, let's stick with this. I give up. Okay, so let's take a look at the market, y'all. So treasuries are basically up. I think I've clicked on the 6 months to 6.24% since the day prior. So as you can see, it's sort of it's flirting between a zero and a three quarters. To be honest, we had this one here that it was turning potentially even negative, but that's where the bonds are. So they're sort of stavering off. I think that they're waiting for more money. Honestly, to be honest, I think that that's what's going on. Let's see what's going on with S&P 500. And I don't know why it's coming up so wonky, but it is. Um, no, no. I tried to zoom out and it still comes out wonky. So S&P 500, basically, now that you can see it, because it's super weird right now, but it actually went up 1.23%. So it was a good up day yesterday for S&P. There we go. Let's see. Dow Jones. See, Dow Jones is appearing much better, much more normal. So I have no clue what's going on. I got nothing, y'all. If you're a programmer, if you know how these techie thingies work, will you please let the brother know? I'm very curious, and there might be other people who are wanting to learn as well. All right, so Dow Jones, 2.17%, so up, 500, almost 530 points. So again, this is one of those things that I said. If you pay attention to what's going on, to the pre-market, to the news, not always, but often, you can actually understand of what's going on and what's happening. And if we zoom in to just a 5 day, you can see kind of what happened right here, right? This was yesterday. I mean, it just jumped up, and so if if you were able to get in pre-market, I guess, I mean, you've made some serious money there. So, and if you did, congratulations on making money. This is super exciting. All right, let's see what's going on. I think this is Nasdaq. Yes, it is. Nasdaq is up as well, as you can see. Not as huge of a jump, but a jump nonetheless. So markets are definitely enjoying whatever it is that is going on, whether it's May, whether it's belief that people are going to go out and shop like crazy, whatever the decision is, whatever the reasons are. They are very bullish, so to say, and they are doing their own, people are going in and buying stuff. Crude oil is slightly down, but if you take a look at it, let's go to the 3 month. This was that giant drop thingy. Since then, it's been recovering pretty well. Obviously, it's doing the top again, and it's kind of like slowing down. But I mean, that's what happens. Look, when you hit negative, when you hit zero, there's only one way to go. Only one way to go. Long term. So it's going to do pretty okay for at least a short while. I don't know if oil is ever going to go back to like $400 a barrel or something like that. But you know, um, we all knew that it wouldn't stay at negative 40 for forever, right? So those that have invested early on, congratulations, you've likely made money. All right, gold. Gold is sitting at 1705. It's not doing much of anything. And if you look at it here, so we had this this is that February kind of nothing was happening, is going up. Then we had this March drop thing that everything dropped. I mean, everything dropped. Uh, and then gold actually was doing pretty okay. Had this kind of went up. It reached, what was that, 1769. And then it's been kind of trading sideways in the channel, as you can see. Let me see if we can zoom in, but you can very clearly see kind of, right, you see kind of how it's going in the channel, where I don't even know if I can draw things in here. um, Probably could attempt, but you saw my drawing last time and it didn't go so pretty. So you see kind of the channel right here. So this is 1680 and 1780. So it's that $100 band that it seemed to be kind of bouncing around. And this is not completely atypical. This happens in stocks, this happens in crypto, this happens in basically anything that is tradable, that has a graph that you can actually see, and you have enough data to actually plot all of it together. And it happens. And so when you have this channel trading where it's bouncing between the two things, it's not going to sit there for forever, right? So typically what ends up happening is that the move that happens outside of that channel, so if the channel is this $100, if it moves on up, it's going to shoot up, right? If it moves down, it's going to shoot down. And so that's kind of where the interesting piece is. So if you really I keep zooming in as opposed to zooming out. So you can kind of see, I'm trying to see if I can find some of that channel thing going on. Give me one day. No. What? I don't understand what just happened. This thing is not playing along with me. I'm trying to see if I can find this sort of channel piece. Maybe a little bit here, although it was a downtrend. Maybe here-ish. But it was kind of, again, it looks like potentially a little bit of a downtrend. So you can kind of see what's going on. But the cool part is, if you zoom out, so this is gold, we're zooming out to since 2008, you can see it went up, it had like this high, and it has this beautiful, I mean, just beautiful cup formation. This is picture perfect. If you were ever to imagine, when somebody was saying, did you ever see a beautiful cup formation, I'm going to have to say there was that one time in 2020 where I looked at the price of gold, and from 2011ish or whatever it was, the high, and it has this beautiful, I mean, just beautiful cup formation. This is and then it kind of hit this like low, roughly what was the lowest in 2016, and it has this beautiful cup formation. Exactly. So it's so pretty. Like you don't see it all the time. You don't. I mean, you see it. There's just not all the time out there, and all these different asset classes and different um, assets. That you get to see it, this is something more likely that you see. You flatline is something you see, but you don't see this beautiful cup formation. Like it's just picture perfect. All right. Clearly, I'm a bit of a geek and a nerd when it comes to charts. So, what this basically tells me is that, and that I haven't explained to you, what this basically tells me is that gold has a fairly strong potential to actually go higher up. The reasons for that are I was going to say twofold, but then it's more than just two. Then I was going to say couple whole fold, and I'm like, I don't even think that that's a word. But anyways, uh, what I wanted to share with you is that partially is because whenever there's uncertainty times, gold tends to perform really really well. Whenever there is a belief that inflation is going to come our way, whether that's true or not, but if people believe it, then gold actually tends to do pretty well. And whenever there is, you see this beautiful channel thing kind of happen, not channel, but cup formation kind of happening, that typically, from analyzing the charts, indicates that we are going higher. So I mean, we're going to have to beat this highs over here. But as long as we can do that piece, it should go much, much higher. So there's a lot of people that have a lot of strong feelings and beliefs that gold is going to perform really well. And I don't know that I have strong feelings about it, but I do believe that it is going to do pretty well. Okay. And now let's go in, since we're on this topic of the gold, let's go and talk about what is going on. So, if gold is always shiny, but US dollar is hyperinflated, bubble ready to pop. So, this is from Kaiser Report. So, uh, as you can see, Malaysia proposed a gold backed currency as a unit of account for trade between East Asian nations. And he's saying that today the currency is manipulative. And, what we are seeing is that the Kaiser report, number 1395. So if you want to Google and take a look at Kaiser report 1395, you will actually be able to watch what's going on, what they're saying inside the show. All right. And Charles wanted to say hello. Say hi, Charles. All right. I think he's trying to figure out how he can climb into my lap and sit there for a bit while we do this stuff. For the past 40 plus years, we've tried to remove ourselves from a gold standard. We pretend it doesn't exist, and that failed because gold is always telling the truth, and you don't have to trust to somebody printing up a whole bunch of money. So that's Stacey Herbert coming from Kaiser Report. Again, she is quoting the Malaysian PM who said that the gold market is tied to the US dollar, which gives room to the currency to be manipulated. Mike Kaiser calls the US dollar a currency that is now a hyperinflated bubble, saying that once it pops, we'll see gold price jump from 1,300 per ounce to 2,900 per ounce. So again, if you want to watch it, it's Kaiser Report, and it's 1395 episode. So that's one of those things that is interesting. That's the reason why I said there's a lot of movement about gold. We talked about it yesterday with Russia, basically going nuts, so dumping the dollar and moving heavily, heavily, heavily towards gold. We've seen a bunch of other countries wanting to do that stuff. Venezuela is suing UK because they're trying to repatriate their own gold, and so a lot of people are moving into it. Rich people are moving into it. Not so rich people are moving into it. Bunch of people are getting in and wanting to actually, uh, you know, basically invest in gold and hold it. And it's not necessarily an investment per se. It's more really of insurance, right? It's an insurance for what's going on in the world. It's an insurance against what's going on in the world for people that are not as crazy about what's been happening in the world. So it's one of those things that a lot of people really like to get into gold, and of course they get into the physical because the problem with the paper version of the gold, the derivatives as they're called, because it's a version of it, but it's not the real thing. It's kind of like, you know, as somebody once said, and I really like the analogy, like, apple juice is the derivatives of the apples. While they're sort of related, it's not the same thing, right? So that's kind of what's going on. Except the problem is that apple juice still contains apples, whereas the paper gold doesn't typically contain gold behind it. It's a contract that basically says that you will have gold should you keep the contract till the end and then want to take a possession of it. The problem is that there is so much paper and so few actual gold bars and coins, like physical, that it's basically, I don't want to call it a scam, but that's you know what I mean. Like that's kind of where I go with this stuff. I can't help myself. But it's because what they'll do is they'll pay you money. They'll pay you back in the fiat currency. You just won't be able to receive a gold bar, right? So right here you see a gold bar, right? The picture of the gold bar, and it has, it tells you what the purity is over here. It tells you the weight of it. It tells you who actually is the assayer, so who basically removed all the impurities and certified it. And then it gives you like a number, right? So all of that stuff is what works when it comes to gold. And what we find a lot is that this 10-ounce bar may have, I don't know, 100 claims to it. So there's 100 of us that all own this piece of 10-ounce gold. Well, that's impossible. Physically speaking, that's impossible. Only one of us can receive one of these bars, right? But that's sort of the difference between a physical and the paper, and why countries, central banks, wealthy individuals, investors who've been paying attention and know what's going on, when they get into gold, not always, but often, they do get some physical stuff. They store it. They might, if they think that it's bull area for gold, they might get into the stocks and paper and all of that stuff as speculation. But for safety reasons, for insurance reasons, they definitely get into physical stuff. All right, now yesterday we talked about Russia dumping US dollars and going into gold. However, there's something new that Russia has been doing for a while, and it has to do with crypto. That's right. So I am excited about this stuff because, I've been talking about it for a while. And, when I started to talk about, crypto to folks back in 16, 17, even 18, and I was talking about it, and everybody's like, I don't know, man. You're crazy. There's so many of them. How do you trust it? How does it work? I don't understand. And, and I said, look, the governments are looking into it and they're developing it. And where we're going, the world is going digital. It's going digital. We already have all this digital money, y'all. But we don't call it crypto. It's just fiat money that is being printed, and it's being created. When they say print, they're not really printing money, although they are printing. But like, what is in the print? That paper version that you see that nobody even sees anymore or uses or accepts. Because one of the things that has happened thanks to the pandemic is that there's a bunch of places that don't accept paper currency at all, like at all. Like they have a sign saying if you have paper currency, we're not accepting it. So we're not accepting paper. We're not accepting checks. We want credit and debit card only. And what I have actually been seeing is that you are starting to have the QR codes, which I've been saying those are going to come in, and they're going to come in handy. And so a bunch of the stuff that I've been talking about is coming to fruition, because when I was talking about it, a few years back, nobody is so case for it. And it was just Nev being crazy talking about stuff. But now we have a case for it. And, I'm going to do a shameless plug because before we go into the Russia and China. So if you want to learn how to actually, what crypto is and stuff, if you actually want to come into onedealaway.com, and just look for Crypto 101 course. And we're going to be actually doing it absolutely free. So it's 100% free. And we're going to be going into all kinds of cool things about like what it is, how it works, and just, basic stuff. And the reason really I am doing this stuff, obviously the course is free, is because at some point it's going to be sold, so to speak. So at some point, if you're watching this in the future and you go in and you're like, man, you said it's free, but it's costing money. Well, it's free right now for folks that want to join it, and I'm actually going to be teaching it live. So we're going to be using some of the technology. You're going to learn how it all works, why it all works, why there's different protocols, how they are all interacting, and just basic stuff that you may want to know. So there you go. There's my shameless plug, getting you into a free, absolutely free, 100% free course. Except, there's going to be one time where if you want to play along, you don't have to, but if you want to play along and try using a smart contract does require an exchange of funds. And so if you want to go in and play around with it, there's one session that requires $5 to go through. So that's it. And even that is optional. So, but if you're interested and curious, I really invite you to come and learn about it. But anyways, I've been talking about that governments are going to create this stuff. It's no question about it whatsoever. They're going to come in and they're going to be creating the cryptos, and you may not like it. You may not like their version of it because it means, more censorship. It means, automated taxing revenue stuff, which I guess if it makes it simpler, that's fine. But, I don't think it's going to be built for your and my benefit. So, anyways, Russia, China, Iran, and Venezuela are developing crypto to challenge U.S. financial control. We already talked about the fact that a bunch of the world is beyond upset about the fact that U.S. has been weaponizing the dollar. I was going to say monetizing. Well, they're monetizing and weaponizing it now. Using it as a weapon, using it as a tool for more than just what it is, to push people around and push countries around to do what they want to do. And at some point, and the point has been reached, people get sick and tired of it. And so they are basically going and saying, uh, we don't like what's going on. So the U.S. geopolitical adversaries are deploying blockchain technology to help avoid sanctions and counter U.S. financial power. The increase of adoption of cryptocurrencies around the world, efforts are underway to build new systems for transferring value that work outside of conventional banking infrastructure. Governments in Russia, China, Iran, and Venezuela are experimenting with the technology that underpins the crypto market. So this is one of those things, U.S. says, well, we're just going to put sanctions and you can't use SWIFT. And SWIFT is basically this uh, ledger, let's call it that because it makes sense, that basically helps you transfer money from one bank to another, especially when we're dealing with foreign currencies and going across borders. However, you know, well, the governments are looking to develop, their own cryptos and stuff. I mean, it's as simple as, hire a couple of good programmers. They might be able to get you to ride your currency on top of Ethereum, maybe EOS, maybe there's some of the other, gaming ones, or just just use Bitcoin for crying out loud, and you can switch over like this. And the nice part is you can send it anywhere as long as you have an address. Like it's safe and secure. And again, we'll cover it. We'll cover this inside the Crypto 101 course. So if you have no clue what's going on about it, I invite you to join me. And if you do know what's going on, then it's a super basic intro course, so you're probably not going to enjoy it as much, but you're welcome to. Of course, everybody is. Technology has created a potential pathway to alternative financial value transfer system outside of U.S. control. The target timeline may be 2 to 3 decades, but these actors are developing the building blocks now. They envision a world in which cryptocurrency technology helps them eclipse U.S. financial power, much the way that U.S. once eclipsed the British pound. Okay, time out. I gotta say this. Um, Timeline is 2 to 3 decades. What? Why is it going to take 20 to 30 years? I mean, some of the programmers, like I said, have spit out currencies in like 5 minutes. And if they really get creative, it might take, I don't know, a year, 2 years, 5 years, tops. Why is it going to take 2 to 3 decades? I don't know. If you know why it will take 20 to 30 years, drop me a comment, please. What are your thoughts? What are your opinions? I see this happening. I see actually the world happening. But I think there's going to be a smaller country that is going to adopt Bitcoin. There's actually some countries that already are accepting it, even as an official informal payment. I'm just waiting for countries that are going to use it, not just as an official payment, but they're going to basically either peg their currency, paper currency, to Bitcoin, or which they might not necessarily do because it's still kind of on a volatile-ish level, although the volatility has calmed down substantially. We used to see drops of like 99%, and then an increase of like 120%, and then it's back down 80%. You're like, whoa, this is really wild. But we don't see that as much. We do see drops, we do see increases, but we're not seeing that crazy wild swings in like an hour or in a day or whatever. So, but then again, what the heck do I know? So, yesterday I also talked about something very interesting, and I mentioned to you that at some point countries may decide to go into debt jubilee, right? And we talked about the fact that it was customary when you have a brand new a king that shows up, a ruler that shows up, that all of a sudden they declare debt jubilee. They wipe off everybody's debt, start from scratch, tabula rasa, as they say, and so that's kind of how it starts, and they become loved, and their economy really picks up and takes off because they just sort of deleverage everything. They don't have to worry about constantly trying to feed that monster. So, interestingly enough, here is what I was able to find. Look at this. Kazakhstan to forgive debts of the poor and end bank bailouts. Did I not tell you that this is going to happen somewhere? But this actually didn't realize that this did actually happen in Kazakhstan, where they basically went in, they wiped off, everybody's debt, or not everybody's debt, but basically they're saying the government should not get involved anymore, any longer with its loans as far as private banks are concerned. Maybe something the rest of the world could learn from. I don't know. I mean, it's a smaller, Kazakhstan is a small country that used to be part of the USSR. But, you know, lessons can be learned everywhere from every leader, no matter how big or small. Everybody's thoughts and opinions are very, very relevant. And so I don't want to discount what they're doing. Excuse me. More than 3 million people in the country of 18 million would get help to get rid of debt. It is aimed at people who find themselves in very difficult living circumstances. This is coming from the president. So he's basically saying, you know what? We're going to take lessons from the past, what happened in the banking system, and in a few years, things are going to run pretty freaking smoothly. And what I will actually do is I'll make sure to take a look at what's going on with the Kazakhstan and see kind of how are they doing now, right? Like because when this actually has happened. Was almost a year ago. So 27th of June 2019 is when it was reported. So it was almost a year ago. So I want to see, what happened. Has it gotten better? So it'll be a really interesting kind of study because I think the world should consider improving kind of how we do stuff. Yesterday, not yesterday, maybe yesterday. Anyways, I know we talked about this and we talked about Hertz uh, potentially filing for bankruptcy, Hertz officially filing for bankruptcy, Hertz hurting, and now check it out. I think that this is criminal, y'all, but this is just me. Let me zoom in because you got to see this. And there we go. Oh, yes. Here we go. Uh, and this is actually like May 26th. So this is hot off the press. Last night actually rolled out. Hertz awards over 16 million in retention bonus to key executives. What? They filed for bankruptcy. They eliminated employees. They are not paying their dues, their debts, or any of that stuff. So you don't have money to be a responsible citizen, an individual, and a corporation, but you do have money to give bonuses to the executives? Really? I mean, really? So you Hertz Global Holdings said on Tuesday it has paid about $16.2 million in retention bonuses to a range of key executives at the director level and above days after the company filed for bankruptcy protection. I don't know how this is legal, y'all. I don't even know how this is legal, but we've seen it before. We saw this before in 2008 to 2009. I remember it clearly when the banks were basically being bailed out and getting cash over from the government, and then they would take these billions of dollars and dole out bonuses to their executives. For what? For what? You know, there are 40 million people without jobs, people starving, people not being able to take care of themselves. And, then you have a company like Hertz saying, like, well, we're hurting and we got to go in through file for the Chapter 11, help us reorganize because we can't afford it. But you can't afford to give out millions of dollars I don't know. I don't know. Like maybe I'm crazy. Maybe I don't understand this game. Drop me a line. Tell me how you feel about it. But I think that this should be illegal. This kind of stuff should be absolutely illegal. The company paid President and Chief Executive Officer Paul Stone $700,000 and Executive Vice President and Chief Financial Officer Jameer Jackson $600,000 as retention bonuses. What? What? The right thing to do as a leader is to take a pay cut so that you don't have to lay off people. And if you can't do that, that's fine. I understand, but that's the right thing to do as a leader. You don't pay yourself a freaking bonus. This is the stuff that angers me so much. Not that you can't witness because I keep yelling at the screen. But this is absolutely ridiculous. They have $19 billion in debt, 38,000 employees worldwide. And they're basically saying that, oh, well, we're going to pay people, we're going to pay people bonuses, right? We're going to pay bonuses. And then they're saying, well, employees who receive the retention bonus forfeit the right to participate in the company's 2020 annual bonus plan. You can't afford bonuses. I'm sorry. You're broke. You can't afford bonuses. I don't understand how these companies run and operate and why investors actually put money into them. Like this is crazy. And then why the government is coming to save them. This is the type of company, not that I'm looking for 38,000 people to lose their jobs, but this is the type of company that should be gone. Like this, the types of crashes that we experience are meant for companies like Hertz to be eliminated so that new company, fresh company, better company, more ethical company, because I don't think what they're doing is ethical. It might be legal. I don't know. Obviously, it is legal, but it's unethical and it's immoral, in my personal opinion. Anyways, as you can see, I'm very, very passionate about this. I'm very angry about this whole thing. What are your thoughts? What do you think? Is this right? Is this wrong? Can a company or should a company or even a person be brokered and broke? Receive all of this help and everybody trying to work with them, and then they like treat themselves to all these bonuses and stuff. Like I don't know. That's just the same thing as a person. Like if you're broke and you need a loan and somebody gives you $100 so that you can buy like food or pay the rent and stuff, and then you go and you book a freaking cruise, like yeah, people get angry when you do that stuff. So I don't know. Let me know what do you think? What are your thoughts? Am I like completely insane by thinking that stuff, by going crazy? Is that something that makes sense to you, doesn't make sense to you? Just let me know. What are your thoughts? What's going on? Hit me up in the chat. I'd love to be able to hear about what's going on. So, all right, time to move on. And so we talked about the Kazakhstan, but now I want to actually go into one thing that I've been wanting to cover and that I have promised, and that is let's talk real estate. So we're gonna end it on high notes. I don't like to end things. I don't like to start things with anger. I don't like to end things with anger or bad news for that matter. I like to start and end on good news. So we saw the markets are up, and we're going to end with the beautiful and amazing thing that is happening when it comes to the mortgages. So the mortgages below 3% have arrived. And so here's a beautiful article inside Yahoo Finance, as you can see, that, basically, here we go. Based off of everything that is going on, mortgages are dropping, and we are seeing that the mortgages backed by Federal Housing Administration, FHA loans, and the Department of Veteran Affairs, VA loans, have already fallen into the sub 3 seller. However, we are seeing a major mortgage wholesaler that has rolled out a conventional 30-year mortgage with a rate as low as 2.5%, y'all. This is exciting. I mean, I see this stuff and I am like a kid in a candy store. And with all of the stuff kind of happening, it's going to be an interesting market for sure. The central banker has been saying that economy may not recover until the end of next year, and that lasting damage is a possibility unless the government does more to help. Sorry. We are now experiencing a whole new level of uncertainty, Powell said on Thursday. So Powell has been going around and basically ringing the warning bells left, right, side, and center, really mostly trying to explain why they're printing like crazy, and I think also looking for the support to be able to do whatever, right? Including buying the fallen angels, helping places like Hertz, and that kind of stuff. But anyways, so he's been going around telling everybody all the stuff, and I agree with him. I mean, economy is hurting. It will be hurting. We do need liquidity. We do need cash. So he does need to print. There's no question about it. But it potentially could have a pain point at the other side. So, last time we printed and stuff, we didn't see inflation in a sort of manner where, you've gone through and like all of a sudden the can of Coke went from 75 cents to like $75. We didn't see that kind of stuff, right? Which is good. But we did see inflation display in other manners, and that was in the stock markets, and that was in real estate because prices for those things have gone up. So there is a potential that if we don't experience another inflation in consumer products, right, like the shirts, the pants, the cokes and that kind of stuff, uh, we might experience it yet again in assets. And so the assets that we might see it in might be places like stocks, maybe bonds, um, gold, crypto, real estate, um, oil, natural resources, commodities, right? Like that kind of stuff. We might be able to see all of that stuff. And so there's definitely a case for why getting into real estate. And obviously, I'm a firm believer of real estate and physical assets. But anyways, so they're saying the worse the economic forecast becomes, the more likely we are to see similar moves in interest rates in the future. Another major factor pushing down mortgage rates is the Fed's purchase of mortgage-backed securities to prop up the economy. And this is coming from chief economist with CoreLogic. So this is kind of what's going on. And trying to explain sort of why we're seeing this stuff. And honestly, the reason we're seeing this stuff, whether it's because the Fed, whether it's because of all this stuff, it's because we're in a crisis. And whenever there's in a crisis, the easiest thing is to drop the rates. And here's the thing: if I am the mortgager, right? If I am the bank, I'm going to call it a bank, even though not every person that services mortgage is the bank. But if I am the bank, and what I can do is easily uh, go in and borrow money from the government at 0 or maybe a quarter of a percent. And then I charge you 2.5%, right? Let's assume that it's 0 and you pay me 2.5%. Well, my yield is 2.5% and it's secured loan with an asset on the other side. And because of whom I'm actually lending that money to, I'm also going to find people that have strong credits, that have great borrowing history. So the probability and chance of them treating me well as a lender and paying back the mortgage is really, really good. And at the end of the day, if not, I still have the asset that I can go in, repossess, and then be able to resell. So that's kind of why they're doing this stuff. They can ride this puppy all the way down to 1%, and they're still making a nice spread. It's not huge, but it's nice because, you are getting paid for 30 years or whatever. So, anyways, that's just kind of how it works. So mortgage giant Freddie Mac says 30-year mortgage rates are currently averaging 3.24. However, Mortgage News Daily says its surveys showed that 30-year rates plunged to an average of 3.03 one day last week. But a bit of coffee, always good in the mornings. Uh, They're also saying 30-year fixed rate FHA backed loans have fallen to 2.75 on average. And then we got a survey that says FHA and VA are down to 2.5. So United Wholesale Mortgage, so UWM, has announced a loan. They actually announced this a couple of weeks ago because I might have covered it on this channel, but I know I've actually talked about it and covered it. So they're offering it 2.5%. And they believe that the market is going to be strong and they want to be part of it to basically participate in it. So their expectation is that the prices are going to stay steady or potentially go up. And you know what? They potentially could be wrong, could be right. I don't know. Right? Where I do see some of the stuff happening with the real estate is that the supply is a little bit on the lower end. Because there's still some uncertainty, but there's still some folks now ready to kind of get their homes because they've been stuck in their home for forever and they need something bigger or different or something with a backyard or something with a pool. And so, or something less urban, right, with less people. So there are definitely motivated buyers that are coming out of woodworks. And what we're going to see potentially if the supply doesn't pick up, we're going to potentially see a bit of competition when it comes to prices. I do expect that the supply might come in because there might be some folks that decide they want to sell right now, but only if the prices kind of stay steady. If that ends up happening, people who've been wanting to sell but were afraid because of the pandemic and that stuff, they might decide they want to sell, but they might also wait to buy something first and then sell because of the fear of the virus. They don't want those strangers going in and coughing all over their furniture, right? So, whether right or wrong, that's kind of how I think is going to happen. So, it's going to be a bit messy, but it does have a really good potential of what's going to happen. And I've been expecting that real estate is going to pick up in summer and fall for sure. So, who knows? We're only going to see if I'm right once the time comes, right? Like it's easy to see if you're right or wrong when you look back, but you don't know going forward exactly what's going to be. All right, let's finish this puppy up. Mortgage rates have room to go lower, but lenders who are concerned about the defaults have been raising the bar for some borrowers. So if you are having a great credit and it's a straightforward loan, you get super low rates, and that's basically done. So if you want to get the loan, so what they're basically recommended is that if you're looking to get sub 3% uh, rates, you're going to need to shop around a lot, which is normal. And you definitely want to make sure that your credit score, so they're basically saying 740 at minimum. Preferably, you want to be in 800 range when you go shopping for these things. So if you have 740 credit score or above, there's a good chance. If you have 800 or above, extremely good chance that you can get below 3% uh, rate for your mortgage. And you know what? Even if you don't get 2.5 or 2.7, 3% is a really, really, really good rate, y'all. Because if you go back to the 80s, the average was in the teens. Yeah, it's like 15 to 18, that kind of teen. You know what I mean? Like almost full fledged adult kind of teen. Um, so this is it. This is all we got. We covered a whole bunch of things. I am beyond excited and blessed that you are here. Thank you all for being here and watching live. If you haven't watched live, make sure you join me tomorrow, onedealaway.com/live, because you never know what we're going to cover and what information might spark information for you. Education is the number one way to get yourself from wherever it is that you are to wherever it is that you want to go. Just make sure you start learning and find mentors and teachers that are doing what it is that you want to do, and make sure that they're actually doing that stuff. Okay, so you want to find, as to quote Robert Kiyosaki, real teachers. So thanks for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away. Bye, y'all.